Namaskar and good morning. Today we'll talk about certain stock market strategies. Stock market strategies are more important than individual investments. You must have a wonderful strategy, otherwise, your whole investment may fail. Now, it is said no risk, no reward. That is true. Low risk, low reward. That is not true. High risk, high reward. That is also not true. There is always some risk in any investment. Whether you invest in fixed deposits, the paper that you get may be the same, but the real return on that is conditioned by the level of price rises, inflation. So today inflation is at around 2.5%. So the whatever you get on a fixed deposit, maybe 8% or something like that, is reduced by just 2%, something like that. But not long ago, 2-3 years back, the inflation rate was as high as 7, 8, even 10% sometimes. So, but still the people considered FD rate of 10%, oh great. FD rate is 10%, inflation rate is 10%, real return is 0. That is not known, that is not understood. That's a problem. So, real rate of return on FD is minus inflation. Now, likewise, gold, subject to inflation. Real estate, subject to inflation. Now, subject to inflation, what you get there is what you really get. Real return. But we talk about stock market returns. We are more interested in stock market returns. In stock market also, there is short-term speculation and long-term investment. Short-term speculation is sometimes called day trading, etc. But anything below 3 months, I consider it as short-term speculation only. Many people are asking on TV channels, I have money free for 3 months. Can I invest in this, that, etc.? And people are giving replies also, but I don't subscribe to any of those things. Because, 3 months is very difficult to reply. Anything can happen. 1 day, 2 days, most risky investments. 1 day, 2 days, 1 week. So short-term speculation, I don't advise anybody. Of course, there are a few people who have succeeded in short-term investments also, but I would rather suggest to you to go for long-term investment. Long-term investment, the definition of many people, people go 2 years people consider as medium term and 4 years people consider as long term, but I consider 2 years as the period in which we should get reasonable return. So that is my long term investment. So there are risks in long term investments also. I generally classify into 4 types of risk: investor related risk, company related risk, market related risk, economy related risk. 4 types. Investor related risk means you are the problem for the progress of your own investment. You don't want to learn about the stock market, you don't want to learn about the company, you don't want to learn about what is happening in the economy. So, and you don't want to see how the market is progressing. No, yet you want to invest. There are a large number of such investors. It's not that I am saying some comedy. No, there are large number of investors who don't want to know anything, but who want to invest based on some tips. People ask me also tips. I don't give tips generally. Tips, rumors, etc. Based on that, if you want to invest, you could lose very heavily. So, but investor related risk is unwillingness to learn. unwillingness to learn about the company, about the market, about the economy, about the management, etc. Now, if you want to invest in stock market, you must be willing to learn all these things. Whether you want to invest or not, still learning about these things is essential for any individual in India. Now, when you want to invest in stock market, you must know that any future estimation, we are trying to estimate the future, any future estimate is fraught with some risk. Future is uncertain. You may think that you will get 100% return in 1 year, but you may get 20% return, 30% return, or minus 50% return also. So, future estimation is fraught with certain risks. There are numerous factors. Now, let us go to the investor risk in a little more detail. Now, how do you succeed if you want to be a good investor? First, try to learn about the companies you want to invest. Now, see, channels like mine, we try to give only good companies. Generally, good companies. We brand them as reasonably good companies. I may not say you buy, but when I say this is a good company, this is a wonderful company, excellent company, something like that, it means it is a company worth investing in. But you must take the responsibility for investing. Why should I say that? See, try to listen to my video at least 2 or 3 times. You may miss first time some points. See, plus points and minus points both, I would like to tell you. Now, I might have told you the minus points also, you may be governed by them sometimes. I might have told you the plus points and you may listen only to them and you may be governed by them. Both are wrong. You take into account both things and then try to invest. So, like that. So, that is investor related risk. Then company related risk. If one man can commit such mistakes, 10 people put together, the chairman, executive chairman, non-executive chairman, CEO, CFO, independent directors, whole-time directors, all the people, they are also like you and me. They also commit mistakes. Their decisions, their discussions are also not full-fledged. So they also commit mistakes. We find so many companies going into unrelated expansions, unrelated mergers, etc. Why they are merging, why they are purchasing a certain company, it is very difficult to understand sometimes. So, boards also consider and make mistakes, we have seen. So, that is company related risk, unstable, unreliable, unimaginative management. Then raw material related. See, you have a product, for that raw material may not be available in plenty. Like, coke. Different types of coke which are required for carbon making are not available in plenty. Now, you may expand, but your raw material may not be available. Production related deficiencies are there. Now, you may have old machinery. You have established your factory 20 years back, but current machines are far better. Efficiency related risks are there. Sales related risks are there. Pricing related risks are there. So, you may manufacture with raw material which is priced higher in the current quarter, but you may not be able to sell at the latest price. So, such problems are there for company. Then market related risks. See, the stock markets go through boom phase, bull phase, dull phase, correction phase, bear phase, and so many other phases. So, when a market is going through such phases, good companies, bad companies, all of them either get catapulted up or down. Both are happening sometimes. It has happened in the recent past also. 2017 was a wonderful year, 2018 was a very bad year. Let us see 2019, how it will fare. So, these are market related risks. In market, millions and crores of investors are there. How they behave on a particular day is difficult to foresee. Their behavior can be panicky, can be bullish, can be bearish, whatever. Then economy related risks are there, budgets are there, war related risks are there, pricing of oil, pricing of coal, pricing of other international products are there. So these are all economy related risks. Then government, stability of the government. There was a stable government for the last 5 years. Now, will there be a similar stable government for the next 5 years? Who knows? If market comprising of 1 crore investors, let us say, can make foolish mistakes, stupid mistakes, people comprising of 1.3 billion, 130 crores of people can also make mistakes. They make mistakes. We have seen that we have been making mistakes again and again and again. And you don't agree with my opinion, I don't agree with your opinion. That's the problem. 130 crore people, each sticking on to their caste, their religion, their political ideology, their state, not considering the whole of India. What is good for India, people don't consider and vote. That's the problem. Can happen. I am not saying that happens. See, market is supreme, likewise country is supreme, voters are supreme. Whatever they vote, whether they vote to give a fractured mandate, they vote 30% for one party, 30% for another party, 30% for 100 parties. Still you have to accept it. That's the problem. So we must track all factors. Now, ultimately, stock market investment is a must. If you want to make money, you must invest stock market. Otherwise, you should go into business yourself. Then you become an entrepreneur. Like Mukesh Ambani did not enter stock market but made money in Reliance Industries. He made business himself. Whereas Rakesh Jhunjhunwala did not enter into a business but went into the stock market and made money. You and I are struggling. We are also stock market investors. We are following Rakesh Jhunjhunwala, Ramesh Daman, and people like that, investors. Now, for investor, there are 3 basic actions in investment. One is buy, second is hold, third is sell. So, buying is when to buy, what to buy, how long to buy, where to buy. So, all these things are there. Where to buy is in the stock market, but when to buy, when the prices are reasonably low, you have to buy. You try to buy a company whose price earning ratio is a little low, but whose earning potential is very high. So, like that. So, buy low and sell high. That is one principle, but it is not always possible. But try to buy when a company is still small but is growing well. And then hold on to it for a long time. As long as the company is growing, hold on to it. So 1 or 2 quarters coming down, there is no problem. Look whether the company management is good. Look whether they are reasonably customer friendly and investor friendly. Both should be there. A management which is intelligent, ambitious. A management should also be ambitious. They must be willing to grow. If a management is willing to grow, along with them, we will also be growing further and further and further like that. Now, the management is very afraid, timid, not willing to grow at a reasonable pace, then there is no point in holding on to such companies. The current margins may be good, but the company will not grow like that. But the company is ambitious, hold on to that company. In good and bad times, hold on to that company. Now, when I say buy, you must invest only for long-term investment, 2 years minimum. If the money is available free for 2 years, then invest. Otherwise, don't invest. Say, if money is available for 3 months, but you make investment, you may suffer a lot. When 3 months are over, the company's prices may have fallen or may have risen. You can't predict really. Future prediction is difficult, but long-term prediction is easier than short-term prediction. Short-term money, don't invest in stock market. If money is available at least for 1 year, people are asking advice, can I invest this like that, and people on some TV channels are replying also. It's up to you. I am not an advisor on short-term investments. I advise on long-term investments, and my long-term is only 2 years, which is the medium term for most other people. Now, as an investor, you please consult good websites and good YouTube channels like mine. I do consider my channel as a good channel because I put a lot of effort in making my each one of my videos. And but I would like you to listen to it at least 2 or 3 times. See, before you put 1 lakh or 50,000 or whatever you want to put in into an investment, just think of it. At least spend 1 day. At least once, try to collect all the information about the company like I do, and then listen to videos like mine. So then you will not suffer. So I advise against short-term trading. Many people have lost their heavily. I don't advise you to go for trading at all. Junjanwala doesn't advise. Many other best investors do not advise. Now, Indian markets are a little immature markets, let me tell you that. Here, people go by tips and rumors very often. And therefore, only best companies they are selling. And that is what Warren Buffett says. When people are selling best companies in droves, you go and buy. But you must be a long-term investor. So if you are a long-term investor, go and buy, no problem. Price earning ratio of 10 is very good. Price earning of 2 is wonderful, as long as the company is good. Like that. Now, of course, Indian markets are a little immature. In an immature market, a mature investor also suffers sometimes, but he can take advantage if he is a long-term investor. So, then whether you have to go for big companies or medium-sized companies or small-sized companies, that depends upon your taste. I go for medium and small-scale companies because my impression is large companies cannot grow at a fast pace. Small companies can grow at fast pace. They can become small companies can become large companies, but large companies cannot become extra large companies very fast. But companies like airlines are doing it. But is their share price doubling, tripling, etc.? No, that is not happening. Small companies, medium-sized companies only can do it. Now, my expectation is after the results are over, the market will grow again. One way or the other, let us hope that people will vote intelligently. You cannot always predict. I am very open about it. People are not rational. So people can vote in any manner. People are not rational. Market is not rational. You are not rational. Company managements are not rational. That is the risk. Therefore, but you become a mature investor. Go on investing. Profit from it. I will give you more and more strategies in future and wonderful companies also. Follow me. Subscribe. Tell your other friends also. If there are more and more investors, if whole India gets invested, you will profit a lot. Do that.